Happy Wednesday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Wednesday, March 6th, 2024. As always, we'll start with the executive summary from today's leadoff morning note. If you would like the analysis supporting these conclusions, as well as what to specifically do about them in your portfolio, you need to be a client of 42 Macro. So, as always, we'll start with today's key macro event, which is the no landing versus soft landing tug of war continues. So the nuance there is yesterday's ISM services report supported the soft landing scenario at the expense of the no landing scenario. Today's ADP employment report supported the no landing scenario at the expense of the soft landing scenario. Elsewhere, Chinese officials doubled down on their pledge to defend the country's 5% growth target. In terms of market implications, we continue to believe the no landing scenario will overtake the soft landing scenario as the consensus expectation among market participants, but we view that outcome as 1 to 2 quarters away. Additionally, more front-loaded stimulus in China supports our positive medium-term outlook for global liquidity. Refer to our February 27th and March 5th leadoff morning notes for our latest deep dives on global liquidity dynamics. Lastly, Fed Chair Jerome Powell testifies before the House Financial Services Committee today. We expect him to sound as hawkish as the NVIDIA and Bitcoin charts look good. Transitioning to 42 macro dashboard here, getting an oversold signal here in the U.S. dollar, so that's not a great sign for risk from a short-term tactical standpoint. Oversold signal for crude oil, not a great sign for crypto. If you recall that, not you recall, but for those who are in the know in terms of reviewing our quantitative risk management systems every morning, Bitcoin has been the dominant driver of Bitcoin over the past 3 months. Has actually not been liquidity. It's been the cyclical inflation expectations, which we proxy by log price changes in crude oil. In terms of we had a oversold signal here in agricultural commodities, so definitely probably a decent spot if you're looking to potentially play a medium-term pivot to reflation market regime or an inflation market regime. Commodities would be a good spot to think about accumulating those assets here. And then I think we had some oversold signals in in the 10-year nominal treasury yield. It means about 10 years overbought, 10-year notes overbought. 2-year nominal treasury yields oversold. It means 2-year notes overbought, and 10-year tips yield is oversold, which means 10-year tips are overbought here. And so where's the question? My apologies here. We did have a question. This is exciting to watch, I'm sure, on TV. Where is that question? Here we go. Gotcha. So as always, we'll wrap up with a question from our audience here. So getting a question that reads, do we anticipate the projected negative net bill issuance in Q2 is having a material effect on markets? The answer is no, we're not. The net negative bill issuance is something that could potentially slow or see the RRP, the roughly $400 billion in the RRP stop declining. But the reality is the only real issue with respect to the treasuries, the only real issue with respect to asset markets in terms of having to digest a treasury supply is the bills. Not the bills, is the bonds. And if you look at the projections for bonds in 2Q, it's the lowest share of the coupons since we've seen since 4Q of 2021. So we're not expecting any real material change in the kind of the Fed, treasury liquidity matrix in the second quarter. We expect that to change in the second half of the year, however, as the no landing scenario becomes consensus among market participants. But again, as we said earlier, we think that's 1 to 2 quarters away. So we'll wrap it up there. Darius Dale presenting our macro minute for Wednesday, March 6th, 2024. Everyone have a wonderful day out there, and catch me on Real Vision this afternoon at 4. I'll be joining our friend Maggie Lake over there to unpack. There's a lot going on, obviously, from China to Jay Powell to the JOLTS report today. So there's a lot going on in terms of managing risk and asset markets, and then obviously we got the jobs report on Friday. So check us out there. We'll see you this afternoon at 4. Have a great day.